Okay, and I guess we're live. Okay, so good morning, everyone. Thank you for joining us today. My name is Kyriakos Pavlou. I'm the director of Electi Academy, which is the branch of Electi Consulting that deals with knowledge transfer, trainings, and research. Today's event is a collaboration with Cyprus Blockchain Technologies, which is a local consortium of banks, funds, Big Four, and other large businesses, law firms, and so on. Today's event focuses on the disruptive and transformative impact of blockchain. Blockchain is an emergent tech, and we will see specifically how this technology can be applied and what impact it has on the real estate industry. So without further ado, I'm going to introduce Dr. George Theocharides, who is the Vice Chairman of the Cyprus Securities and Exchange Commission since July 2020. He was an associate finance professor at the Cyprus International Institute of Management, and served as a director in the financial services program for 10 years. Prior to CIM, he was an assistant professor of finance at Sungkyunyang University of South Korea, and he also was an international faculty fellow at Sloan School of Management at MIT. He has served as a member of the board of directors of CySec, and a member of the interim board of Bank of Cyprus, chairman of the board of the Cyprus Blockchain Technologies Limited, and also a member of the board of directors of the Cyprus Kuwait Business Association. George, the floor is yours.
Thank you, Kyriakos. Ladies and gentlemen, good morning to everyone. I would like first to thank the organizers, Electi Consulting, and the Cyprus Blockchain Technologies, which, as Kyriakos mentioned, I was a proud member and past chair before joining CySec, for inviting me to give this welcome address today. Okay, technology is a key pillar in shaping every facet of the world that we live in, and financial markets are no exception. The development and innovation of financial markets aims to facilitate the flow of resources where they are needed most in an effort to foster economic growth. The development of new and emerging financial technologies is a product of evolution, but it is also an accelerating force for further sectoral evolution. And considering the rapid developments around financial and regulatory technology that span from cloud computing, digital identification, to big data analytics and artificial intelligence, I think that it is not an exaggeration to say that we might be witnessing the beginning of a new era in the financial markets. And such rapid changes come with many benefits, but are bound to also come with new risks. And we at CySec are part of this process in order to encourage and support innovation in the financial sector to determine the future requirements for new legislative and supervisory priorities and continue to ensure the investor protection. And to this end, CySec has launched an innovation hub aiming at addressing the risks and opportunities involved for the end investor and the overall integrity of the Cyprus and the European financial system, and at analyzing the potential areas of supervisory priorities in order to enhance the regulatory and supervisory treatment of new or innovative financial activities. So distributed ledger technologies, DLT, such as blockchain and the applications, are at the forefront of innovation, and they therefore fall under CySec's remit. DLT became widely known due to its application to crypto assets, which is a challenging area for regulators due to their novelty and the new risks that arise for the end investors. And Bitcoin, which was the very first project that introduced the underlying technology, was underpinned by a rebellious philosophy of creating an ecosystem independent of central authorities, fostering decentralization and disintermediation. This philosophy unavoidably raised eyebrows amongst the community of regulators, as it is well known to us that the orderly functioning of the financial system is a product of regulation, and supervision. The crypto assets projects that were developed later on were sharing a similar philosophy as the one underpinned the development of Bitcoin and therefore shared similar risks. So based on an analysis undertaken by CySEC, it was observed that the crypto assets market is highly volatile and highly unpredictable. Certain crypto assets experience high levels of intraday volatility and in some cases high level of intra-hour or even intra-minute volatility leading to price gaps. Furthermore, crypto assets are bearer instruments, and where they are being used as a form of payment, there's an increased risk of money laundering and terrorist financing. So this is exacerbated by the fact that in contrast to cash transactions, which are also high-risk transactions, they do not require the physical presence of the respective person who executes the transaction. And this lowers the barrier for this type of transaction to be carried out, increasing thus the frequency of high-risk transactions and posing a significant operational risk to the system. In addition to the above, decentralization creates cyber and fraud risks and legal challenges. And the emergence of initial token offerings and assets tokenization creates additional challenges as several tokens issued appear to share substantially the same characteristics with financial instruments. Such tokens were therefore likely to qualify as financial instruments that should be offered in line with the existing regulatory framework. As early as 2017, CySEC issued several warnings informing investors about the risks that crypto assets entail and drew the attention of firms engaging in crypto assets activities to the need to evaluate whether their operations fall under the existing regulatory perimeter. Without prejudice to the risks involved, distributed ledger technology per se is a significant achievement. Creating distributed, immutable, and time-stamped records could bring a number of benefits to several sectors. Particularly in the case of securities markets, DLT could contribute to cost reduction and may create more efficient post-trade processes and enhance reporting and data management. Initial token offerings could provide alternative, less complex and less costly fundraising opportunities for startups and alternative yet riskier investment opportunities for small investors. Assets tokenization could enhance the liquidity of certain illiquid assets and make the transfer of ownership easier and faster through the automated execution of contractual terms by means of smart contracts. This could also reduce the involvement for intermediaries and the cost entailed. So in an effort to establish a communication channel with fintech entities and to further explore the risks and the benefits of the technological developments, CySEC launched its Innovation Hub in late 2018. In the context of the operations of the Innovation Hub, CySEC engaged and consulted with several entities innovating in the financial sector, including in the area of crypto assets. Our proactive engagement with such firms ensured that our expectations in relation to the AML safeguards were clearly communicated to the interested parties and corroborated our prima facie understanding that a proportion of initial token offerings and assets tokenization is likely to fall under the existing regulatory framework. In fact, the majority of real estate tokenization projects reviewed under the Innovation Hub appear to fall under the legislation governing the operations of alternative investment funds, and trading facilities operating in a DLT environment appear to qualify as trading venues such as MTFs. However, the majority of DLT projects reviewed appear to be at a premature stage, and interested parties did not manage to demonstrate that they were able to scale up the technology in full compliance with the regulatory perimeter we have in place to protect investors and ensure the smooth functioning of the capital markets. The work undertaken by the CySEC Innovation Hub underlined the need for further guidance and legal clarity, as also for additional safeguards in the case of crypto assets that do not fall under the existing regulatory framework. So our observations informed our input at the national and at the EU level through providing advice and expertise to the Cypriot Ministry of Finance and through our participation at ESMA, the Pan-Supervisory Authority for Europe. Recent developments at the national and at the EU level confirm CISEC's view on the risks and the benefits that DLT entail. Specifically at the national level, the government has published its national strategy on DLT, aiming at facilitating the seamless application of DLT across various areas of the economy and public administration, and at addressing the risks that are stemming from crypto assets for the end investors and for the integrity of the market. At EU level, a legislative proposal was formulated that envisages amendments to the existing regulatory framework in order to corroborate that security tokens qualify as financial instruments, create bespoke rules that are risk-specific, and create a pilot regime for DLT-based trading venues. Another point is to introduce a new regulatory framework in relation to the tokens that do not qualify as financial instruments. And lastly, introduce bespoke rules for stable or asset-backed tokens. So CISEC is actively involved in making these national and EU initiatives a reality so that we manage the risks associated with new financial innovation without stifling the very benefits that they're intended to provide. So I will conclude by reiterating that CISEC is fully committed to exploring the benefits and the risks of financial technology in the context of process optimization, the cost reduction, and investors' protection. We will continue to closely monitor the relevant developments to examine whether DLT applications could be delivered in a prudent and compliant manner. Our engagement might be further intensified as the launch of a regulatory sandbox is currently contemplated at CISEC. We're also committed to continue contributing our input at the national, the EU, and the global level through our participation at various decision-making and discussion forums. So thank you very much for your attention. Back to you, Kyriakos.
Thank you very much, George, for the informative address. So just to let everyone know, there is a lounge area where you can sit and join virtual tables, and you can talk to each other, interact with each other, or through the live chat or direct messaging. So how we're going to do this, I'm going to briefly show a couple of slides just to get everyone, so if people are not very familiar with the concept of blockchain and what that technology is, I'm going to share a couple of slides right now, and then we can move on to the next session with Ms. Andre Mikhail. Just to briefly introduce what blockchain is. Well, blockchain is a new tech. It's a system of records that enables independent entities to establish a consensus around a shared ledger, and without relying on a trusted central coordinator to provide authoritative measure, the version of records. So it's also, called, you will see the term distributed ledger technologies, which is technically not the same as blockchain, because blockchain also has an aspect of a cryptography aspect that makes the whole system robust, and is designed to be capable to operate in an adversarial environment. So most of you must have heard of blockchain. It's a big buzzword, and here you can see the hype cycle coming out of Gartner. Right now, we're just moving down into the trough of disillusionment. People are sort of, especially in the tech industry, are just sick of hearing about blockchain. But hopefully, right now we're moving out of that, and specific use cases with actual value will be identified and implemented. So just more formally, it enables a network of independent participants to establish a consensus around an authoritative ordering of cryptographically validated transactions. These records are made persistent by replication, through replications of multiple nodes in a network, They're tamper evident by linking them with hashes, some specific advanced cryptographic techniques, and the shared result of the consensus, the actual ledger, serves as the authoritative version of these records. And it has very desirable properties, like, you have records that are shared among people, multiple parties that technically might not, or traditionally might not talk to each other. They can reach a consensus about the actual state of reality. There is an independent validation aspect, so it's transparent, especially for public blockchains, like everyone can read what's on it. It's tamper evident, so if someone, and tamper resistant, so if someone tries to change something on that ledger, it's immediately obvious, or it's very hard to do this. Okay, and that's it. So I'm getting some questions in the chat. So George is asking, is there a bounding time frame up to when the authorities must have adopted blockchain? So just to give you a bit of background information, there was an initiative by the Cypriot government. Well, actually, the Houses of Parliament, the Parliament of Cyprus, where there were working groups, 3 working groups that were looking into the application of blockchain in the public sector, in the financial sector, and the legal aspects of blockchain. So these working groups have been were convened. It was last year. There is a blockchain strategy, a national blockchain strategy that has been produced, and you can find it online if you search for it. There is a draft of the legal aspects of the legal framework for blockchain adoption in Cyprus. That is not has been circulated, and the government has solicited feedback on that. It's not done yet. More on that you will hear from Andri, or in the next session. There was also an RFI issued by the chief scientist when Mr. Kyriakos Kokkinos was chief scientist. There was an RFI to gauge let's say, the appetite, the interest, the capabilities of the market in terms of the specific use cases that are going to be adopted by the government. The RFIs were submitted last January. We heard about a month ago on the results of these RFIs. Some of the use cases identified have to do with the land registry. There is also use cases on supply chain, on customs, on certificates, educational, like high, university level education certificates. And we're expecting the government to come out with RFPs, so people and consortia can actually submit proposals for the implementation. Okay. So I'm going to end the session, and then we'll start with the next session with Ms. Andri Mikhail. Thank you.